Hello, everyone. A very good afternoon, a good evening to you. And as promised, I'm live now online at 5 p.m. as I had written yesterday. And today I'm going to talk about one of the marquee stocks of the market, which has fallen 15-16% yesterday, I mean, on the day uh, previous to today, and we have seen SBI cards go down quite dramatically. So I'll discuss as to why the fall took place in SBI cards. Along with that, I'll also discuss about a second stock, and that stock would be HDFC AMC, another stock that has fallen to around 2000 levels and have recovered from those levels. So, what could be the strategy in that? So, these are the two stocks I'll talk about. Apart from that, I'll also talk about the markets. The stock markets have gone up steadily and is beyond 9,000 and maybe going towards 9,300 in the coming days. So, where do we stand at the moment? People who are about to invest, people who have money on the sideline and who want to invest, whether the time is gone, is there another chance for 7,500 to come back, and many other things. So, I'll talk about the markets as a whole. Uh, I'll talk about other stocks which I'm holding, which is Tanla Solutions, Skillpest, and the stocks that I have been bullish on all the way. So FL India is another stock. So there would be a lot of stock talk that I'll try to do if I get time about all these. Plus, I'll try to answer all your queries. So let's get started with the things. Let's have a number of people join in. Right now, only a dozen people are in here on this chat room. So let there be 40-50 people here, and then I'll start with the discussion. First of all, I want to know from you people, whoever is online at the moment, that what do you think about the lockdown and the current situation. So people who have looked at some of the stocks like IRCTC, which have went up something like what uh, doubled from those levels, or 60-70%, it's up 60-70%. Do you think IRCTC need to come down now from those 13-1400 levels, uh, and all those points? So I'll discuss all those points as well, and I would like to know your opinion as well. So hello to all of you. Hello to Pavitram, Khalid, Walaikum Salam, Prashant, a very hello to you. I hope you're doing good and just stay safe at home. Same to other people as well. Karan, who's online at the moment, and others. So at 9100, as I discussed in my Q&A session, and kindly keep your questions coming in, and I'll try to answer that on every Sunday. Uh, as I discussed on the Q&A session, and I want to discuss about the markets first of all. What I want to say is that currently the market is trading at something like 20-21 times earnings. And I do not think that a market of that sort should trade at 20-21 times earnings when there is a total calamity across the board in the nation. So one has to have that sort of an understanding. And in that regard, I do not believe that the market can sustain these levels. Of course, it can go up to 9,300, 9,500, 9,800 and to those levels, but will sharply come down. So we'll go up on as a staircase, and will go down like we go down in a lift. So we're going to go down in a heap in 2 or 3 days time. So we'll be down 10-15%. That's what I'm expecting. Yes, gradually we can move up to 9,300, 9,500, so on and so forth, but that would be extremely expensive considering the nifty earnings that we are going to see in FY21. And I believe that this is going to be a sea change of sort completely for the years to come. And that's why some of the sectors, which I have mentioned many times, might well do well over the next 3, 4, 5 years. And some of the sectors might not do well over the next 4, 5 years. So that is my consideration in short about the market. Now, before I get into discussion with the SBI cards, I want to just request you that kindly subscribe to my channel and hit the bell icon so that you can get my videos straight away when I post it. And also support me through Patreon. I'll discuss and I'll share with you the Patreon link as to where it is. And I would like to thank all the 41 patrons which are already a part of my Patreon network. And there you can ask me questions, queries at any time with respect to your portfolios and stocks, and also can view exclusive articles and exclusive videos on different, you can say, on market topics as well as on different stocks, etc. So you can visit that site as well. Also, I would like to let you know that the super chat feature is on, so you can ask questions through the super chat or super stickers, irrespective of whatever I'm discussing at the moment. Later on, I'll take up your queries as well, which are common queries. But if you ask me through super chat and super stickers, I'll definitely answer that between my analysis as well. So now I would like to discuss about SBI cards. Interesting stock, and I had bought that earlier on the day it was listed, and then sold with a loss of 3-4% at around, I think it was around 680, 685. So I bought at 700, 710, and sold it at 685. Uh, Later on, now I see the stock at 500. So what needs to be done and why the stock have fallen? First thing first, the stock is a blue chip. There is no question about it. So no, do not make a mistake that okay, something is wrong with the stock and this will go down to 300, 200, and all that. It won't happen. It is just that the problem with SBI cards is that they also furnish out, you can say, credit cards, and credit cards EMI defaults are not taken care of, you can say, by the government, and it is not under any sort of leeway as other, you can say, defaults are. Or for that instance, you can have the EMI being supplemented 3 months down the line, it can be extended, etc. So there is a fear that many credit card defaults may happen this time around, and SBI cards could come out with a lot of NPAs and the things of the similar likes, and there are fears of that sort. Plus, SBI cards fall under the same ambit as other financial companies, so it is getting bruised and battered. Plus, you have the valuations part that it was trading at around 40, even 50 times at 700 rupees. Uh, you can have an understanding that that the EPS of the company is 17 rupees. So at around 700, it was trading at 42, 43 times. And I think it will come out with around 17 rupees earning, but it will be stagnant for the next year. So probably the next year earnings would be around 16, 17. And in that regard, at 600 rupees, it is still trading at 35 times or so, and which I believe is expensive because the earnings will not come. So why would the PE be so big? So I think there will be a PE re-rating, de-rating in this case, not a re-rating. A re-rating is taking place in Kilpest, but a PE de-rating would take place in SBI cards, in which probably it will trade at 25 times earnings, but I'm not sure where it would go. 25 times earnings would be around a 303, sorry, 400, 430. So you can buy straight away right now. That is my understanding. You can buy SBI cards around, start buying from 500, 520 levels, and probably add more once it declines to 450, 440. I think the stock can go to as low as 400 rupees. But then again, we are not sure as to what could be the bottom of any stock or the market. So we are not here gods, and we cannot predict as to what could be the low. This is a great opportunity to buy the stock at least 50% discount, because if you remember, when the IPO was about to come out of SBI cards, people were thinking of that it would list at 1000 rupees, 1100 rupees, and the I think the IPO price was around 700, 750 or so. I don't remember the exact price, but 750. So everybody was gung ho about it, and we were looking at a listing at 1000 rupees, and right now the stock is at 500. So you have to take all these things into consideration. Once the market recovers, once everything pans out well, and once you see these kind of stocks which are leaders in the market, which will remain leaders in the market, move higher, this would easily double from these levels. So very good levels to buy it, but you have to have patience of at least 1 to 2 years to see 1,000 plus levels in the stock. You may see it very early, but you need to have at least a time frame of a year or so. Uh, Second point about SBI cards is, yes, 500 it may not sustain here. It may go up tomorrow to 550, 560, might come back to 400. So I'm not sure that you buy everything at 500. Probably you buy 20% at 500, buy more 30% at 450, and put in all rest of 50% at 400. I think 400, below 400, if it goes below 400, there will be strong buying from DIIs, FIIs. I think at 400 rupees it would be a steal, because that would be trading at only 24, 25 times a stock that has generated a 28, 30% profit growth over the last 3, 4 years. To come at 25 times is ridiculously priced. And hence, to this is a very good opportunity to get into SBI cards. So that is about SBI cards. Buy between 500 to 400 levels if it comes down to, or if it goes up even, then you can add, because these are discounted levels, and these are the opportunities that we have to latch on to, irrespective of where the market is. The second stock I want to talk to you about is HDFC AMC. Now, I have been very positive about HDFC AMC for about something like, for the time it has been listed, and it has gone up sharply, and it went to 3900. And some of my subscribers, if they are here and who will be watching later on as a recording, they might understand that at the time when it was trading at 38, 3900, I made a call and made a video with respect to HDFC AMC that is extremely expensive and when is the right time to buy it. And I said around 2800, 3000. Right now, the stock is at around 2600 and it went to 2000 rupees. These are very good opportunities in this stock as well, HDFC AMC. But again, the AMC business and all companies which do AMC at the moment might not do well for the next 2 quarters. So the results would be appreciably bad. But maybe the market has priced in the bad results. So at 2000 rupees, I think the market has priced in all the bad results that would come for HDFC AMC. So any dips towards 2000, 2200 levels will be very good opportunity to buy into HDFC AMC and accumulate this stock for the next 5, 7 years. It will give you hopefully consistent returns of 20 to 23% year on year easily. And same with SBI cards, and maybe more. The return could be even higher. So that is my opinion about HDFC AMC. Very good levels to buy it. Don't look at the appreciation from the lows, look at from where it has fallen and where the stock is at the moment. Because whenever the market or the stock market falls vertically, there is always a vertical rally, which is a bear market rally, in which good stocks go up multifold. So that's why HDFC AMC has gone up something like 30%. In that regard, there could be you can say a decline of 10 to 15%, and that's where you just need to jump in and buy into the stock. So these are the two stocks that I wanted to discuss with you in detail, and I believe that these are good opportunities to get into SBI cards as well as HDFC AMC. Once again, I want to just remind you that the super chat feature is on, so kindly use that. It will help me grow the channel and as well as help you eke out answers from me in greater detail in this live chat, because a lot of queries come in for stocks, and I miss many of them. They just flash by. Now, coming to the stock market and whether it is headed to 7,500 or 7,000 or not. So, as we have just heard today with Mr. Prime Minister saying that the lockdown is going to be extended till the 2nd of May, and this was more or less expected by many of us. I would suppose that the lockdown extension was expected, and I believe that there could be a third extension of the lockdown all the way to 15th, 16th of May, with the kind of situation that is panning out. So, what needs to be our strategy? I believe that if the Nifty goes to 9,300, 9,350, if you're holding some shares in which you're making good profits, or if you're holding some shares which are of low quality with high debt, high pledging and low growth with no growth or very less profitability, you need to get out of them. You'll get a very good price to get out at 9300, 9350, and then look for levels closer to 8000, even 7500. I believe 7500 should come in the next downturn, and probably then invest into other blue chip companies as I have just mentioned. So some of the other blue chip companies as well, which I mentioned as multi-bagger ideas. So probably that would be a prudent strategy. What I'll be doing, I am very stock specific at the moment, and I can discuss with you my stocks. So, in that regard, I currently hold a lot of Tanla solutions, and I would like to buy more of it. Second stock that I currently hold is FL India, which I hold less, and I could not buy, and it is in upper circuits at the moment. So I'm looking to buy into it whenever that circuit opens and the stock falls a bit. I'll be looking to buy a few of FL as well, and currently I'm holding Kilpest India, for which a lot of queries are coming in. I'm going to come up with a long video on Tanla Solutions, hopefully either this Saturday or next Saturday. And it will be a totally new video in which there will be a complete analysis of the numbers and the future earnings, etc., and what I believe the stock could go to in 2, 3, 4 years time. So there will be a complete, you can say, Excel sheet analysis of what Tanla Solutions is doing. I hope you would like such videos. So I'm in the process of making that. Uh, so let's discuss the three stocks one by one in brief. So one of the stocks that I hold is Kilpest India, and people were talking about it, that how can it go to 450, etc. Right now it is at 129 rupees. Many of my viewers have mailed me and have requested as to how to get the share when it is on circuit. So whenever the circuit is taken out, and whenever you have a chance to buy into it, you can definitely buy into it and have a good 2, 3 year time frame. I believe in the next year and a half, we could see levels of 300, 350, and probably in the next 3, 4 years, easily the price target could be well above 500, 600 rupees. It is a very small company which is into diagnostics, and it has got the approval for testing as well from ICMR. So I have no doubt about it that the stock could go higher and could easily double from here in the due course of time, and even go higher after that. It is only a 90-95 crore market cap company even now at 129 rupees. The EPS is around 8 rupees, 8.5 rupees for FY20. So very nicely poised and very cheap on the PE basis. So there could be a complete PE rating of Kilpest India. The second stock that I am holding is Tanla Solutions, and I would like to buy more into it. I have made a complete video on Tanla Solutions earlier as well. You can go ahead and watch that. I believe when the promoters are buying between the levels of 50 and 55, there's no doubt that the stock could easily double from these levels. We have seen the numbers of Tanla Solutions, and although there is high depreciation and due to which the profit numbers are down, look at the sales growth. So from 270 crores, it has produced a sales number of over 500 crores for the last quarter, and the March quarter could be even bigger and better. And I do not see any effect of the current market situation that is on the ground for Tanla Solutions. In fact, with the kind of messaging service revenue that Tanla gets, and peer-to-peer messaging, etc., I believe it's going to even get bigger and get more revenues, because people are more on mobiles and doing commerce on mobile rather than going out, and so, or doing anything on cash. So if there is a online, you can say, messaging and online sharing of money, and online transactions are getting more, then Tanla is going to benefit. So that is the second share that I hold. The third one that I hold is FL India, and which is into again mobile advertising, and it has the revenue of mobile advertising has dropped sharply because of the things that are happening at the moment. But over the years, it is going to be a fabulous company, and the company is coming at a discount. So from 2300 rupees, when it was trading at something like 90 times earnings, It is currently at 1100, so it has halved from those levels and made a low at 900 rupees. I believe any level close less than 1500 rupees are very good levels to get into FL India, and would like to buy more whenever the circuit opens. So these are the three stocks I'm holding. Don't have more money to get into any other stocks, but once I get something out of these three, make good profits from it, then I'll build a bigger portfolio of the stocks that I discussed with you. The marquee consumption stocks like the Pidilites of the world, the Bata, InfoEdge, etc., IRCTC, so on, so forth. All right. So these are my opinions about my stocks, and these are my opinions about you would say HDFC, AMC, as well as SBI cards. Now, just to answer your queries at the moment, so Adil Chaudhary has asked, please tell us about Kilpist, sir. When will the circuit will stop? I don't know when the circuit will stop. I think there will be a couple of more circuits, and I think there would be two, three more circuits because of the extension of the lockdown. That's first thing, and because of the cases that are coming up and it is increasing, the situation on the ground does not look very good, and in that regard there will be more testing, and so probably more revenue for Kilpest, and in that regard I believe that the stock will continue to be on circuits looking at the situation. uh, FDC is a good share. It makes electrol, and electrol is something that is being used globally, and currently with the kind of health situation that we are in, a demand for FDC will only increase, and hence the stock has been moving up. Although on a performance basis, it has not done well over the years. So I'm skeptical about it, but due to the current situation, it's going to benefit, and that's why I believe FTC is something to be looked at, but as a trading play. Camlin Fine is a good stock, and but I believe if you look at the pharma sector, then probably you can go for stocks like Ipca Labs, Divi's Laboratories, Dr. Reddy's, uh, in that order. As so, I think Camlin Fine lags a few meters behind. So if you are invested into it and making profits, then you need to exit it. If you are at big loss, then just hold on to it and wait for your price. Delta Corp is a complete avoid due to the current situation. I don't think such kind of business will start at least for the next 6 months or 8 months. So it's a complete avoid. Thank you, Bhaskar, for your super chat contribution. If you have any query, kindly put that forward. But thanks a lot for your contribution, Bhaskar. Akhil Verma has asked. Okay, Akhil Verma has asked which is best, Voltas versus Whirlpool or Blue Star for long term. I think I would go for Whirlpool. Whirlpool has a number of products that they sell, and their margins are better than Voltas. So in the order, if you ask me, then Whirlpool, Voltas, and then Blue Star. But then again, valuations are expensive comparatively for Whirlpool. On a valuation basis, I would go for Voltas rather than the other two. But purely on the business basis, I would say Whirlpool is better. All right. Can I invest in Varun Beverages and Tata Consumer for long term? Sriram. Yes. Yes, definitely you can invest, but wait for declines. I'm sure market will again breach 8,000, will again go to 7,500. It will take time, maybe 15 days, 1 month, maybe immediately. So at those on those times, invest into both the companies. These are very good companies to invest in for the next 4 5 years. So Bhaskar has asked 10% circuit. HEG hit a 10% circuit. Any special event behind this? Nothing of that sort. It is just because these stocks are beaten down, something like an HEG and you can say Coa Carbon and Philips Carbon, etc. And these are going in one go. So what has been happening is some of the marquee stocks that were doing well in 2015-16 are again doing well. And these are, I think, just phenomena in which this is just a bear market rally, and that is why some of the stocks which were in bear market is getting, I think, slightly bought into so that the valuations become reasonable. That's just about it. Sam Faraz, thanks a lot for your contribution on Super Chat. Starlight Tech, what levels? Avoid Starlight Tech. If you have not bought into Starlight Tech, avoid. And why I say that, its business is more or less into, you can say, sprint, selling fiber optics, etc., which doesn't come under any, you can say, ambit of essential commodities or products. And if this continue, the kind of lockdown that we are facing, if this continue, then you could face more trouble in producing number. This stock would face more trouble in producing numbers. So it's a complete avoid at the moment. I don't know which levels it will go to, but if you don't have it, don't buy into it. Okay, I hold SBI cards at 6:30. What should I do now? Hold or sell? Add more. So Biswa has asked, and I have done a complete analysis on SBI cards right at the beginning of the session. Add more at a 500, add even more at 450, 400, and just sit on it and keep on adding at these levels. These are very attractive levels, and probably sit on it for 3 4 years, you'll get very good returns. Okay. Chitresh Joshi has asked, kindly give your opinion on Tata Consumer. I've just done that. Will it benefit from the theme of go local? And this, well, Tata Consumer itself has very good brands in it. So, yes, it is a good buy, but wait for major declines to get into Tata Consumer. I have 12 IRCTC. What to do? If you have 12 IRCTC at current levels, then hold on to it. If you have 12 IRCTC at 800, then book profits. And the third point is, if you want to hold it for 5 6 years, these are very good levels to buy into IRCTC. Any dips should be bought into. I think over the next 3 3.5 years, I see the stock easily double from these levels, or go to even 3x times from these levels. So easily can go to 3600 to 4000 levels in the next 3 years with the kind of numbers that IRCTC are producing. But short term would be very difficult for the company. NBCC sadly is an avoid. It was one of the marquee stocks on my behalf, and I have put that forward as well. But with the kind of activity slowdown that is taking place, with no activity on the real estate front, and it doesn't look like over the next 6 8 months would anything happen. So this year is gone totally, and that is why it is an avoid. But if you have a 4 5 year time frame, then over the next 8 months, every month you can buy, you can say 10% of it, and probably by the time next year comes, you'll have 100% holding of whatever you want to buy in BCC. You can do that. A risky trade, but at 17 18, I don't think much to lose. It is a debt free company, etc. But do not expect any returns for the next year and a half. That is my opinion. Okay, Raman Dogra has asked DMart or HUL, which one would you suggest? DMart on declines at 1800 would be very good, and similarly HUL on declines to 1800 2000 would be very good. Both are expensive at current levels, and both I would avoid at current levels. I would only buy on major declines. Suven Life Sciences is good for investment. No, I would say Suven is an avoid. I've just mentioned about some of the, you can say, pharma names. If that is good for investment, probably go for that. HDFC Limited is good, but again, when you look at the current scenario with respect to real estate and infrastructure and housing, in that regard, it doesn't look good. But for a longer period of time, if you have a good 5 7 year time frame, these are good levels to buy into HDFC, and probably these levels will not be seen say 6 months 8 months down the line. Indigo is a better share, but then again, why would you like to get into a company whose business is completely stalled? So I don't think these businesses of IRCTC or airlines would begin anytime soon in the next 6 months or so. Astral Poly or Amber for long term. Amber, I would say, would be a good buy. Amber or Dixon would be a good buy than buying anything else for the longer term. Probably a decline of 4-5% would be better. Don't buy all of IPCA Labs. So if you talk about IPCA Labs, probably most probably we would see a decline this week in all pharma stocks. It has run up a lot. They have all. So but decline 8-10% decline from these levels would be good to buy into. So probably you buy 20% now, and on every 3-4% decline, buy into IPCA Labs. So I keep saying that you buy at declines and all. What if the stock goes up? So have an opinion. Suppose if collapse is, I don't know the exact price at the moment, but suppose a stock is trading at 100 rupees and I say that it is good to buy at around 70, 80, and it goes to 120, then you buy into it. So any 20% up move or 20% down move, you get into the stock. And then same with the next 20% up move or down move. So if it goes to 120, you buy. If it comes down to 100, you buy again. Or if it goes to 120, you buy the stock. And then if it goes to 145 or so, another 20% upwards, you buy the stock again. That would be my opinion. Avoids the entertainment. A lot of things are going on with management, with the kind of corporate governance, and with whatever they are trying to buy into, acquire, and many other things, put in money and so on and so forth. It is a complete avoid. I look at stocks which are very safe and which are simple. So the businesses need to be simple so that I'm able to understand the stock in detail, and I'm able to, you can say, understand the business as a whole rather than buying into some complicated businesses. I want to again remind you that the super chat feature is on. So kindly use that to ask questions, and that would help me to answer your questions in greater detail and help me grow the channel as well. Future retail is a complete avoid. In fact, this whole group is an avoid with a kind of, you can say, pledge share selling taking place in future consumer. We could see the same situations with other stocks, and no matter how much the management is trying, I believe that future retail is a complete avoid. Any suggestion on any e-commerce related stocks? Yes, InfoEdge is a very good stock to get into. So I've always thought, and I believe Tanla and FL falls into that domain, although not quite into commerce, but advertising and messaging. So InfoEdge, Tanla, something like you can say FL India, India Mart, Intimesh, all these stocks would do well with the people sitting at home and not going out for shopping and all. Probably what they'll do is shop online, and that's why I like these companies. Avoid Hindustan Copper or metals at the moment. They're in dire straits at the moment. Both IPCA Labs and Dr. Lal are buying opportunities at lower levels. So 8-10% decline, get into it deeply. Yeah. Quest Corp is a good share, but will suffer with the kind of lockdown thing and things that are happening. So probably avoid for the time being, but later on, probably in 6-8 months time. So what you can do is do an SIP in Quest Corp over the next 8 months. You'll do fine. Do you think Naukri info has chance to strengthen its position? Yes, I believe so. See, these companies are market leaders in their own domain. So Zomato, for instance, Zomato has begun with grocery delivery rather than going for, you can say, deliveries from restaurant. So they are also changing, and Zomato, InfoEdge owns 40-50% of Zomato as well. So these online businesses are changing with time, and they are trying to adapt with all kind of situations. So it is not that their revenues would be zero this time around. In fact, these are the times where there would be a complete shift by people and consumers towards buying more online rather than going out, and people would be afraid to go out for a longer period of time. So one needs to understand that. Page industry is a good share for long term, especially at current levels. But again, the recovery may take time, but it would easily give you 18-20% return year on year going forward. No, it is not safe to buy to hold Sterlite Tech, but if you have held it for a longer period of time, then or if it is down big time, then hold it for at least your losses to cover, or at least losses to become lower or minimize losses. Otherwise, do not get into the stock or average it. All right. Reliance and TCS at buy at Reliance would be a good buy at around 1100, 1080, around that below 1100 levels. TCS is good level to buy at right now, or any 8-10% decline would be good. So start buying now and probably average it at low levels. These are very good companies for the next 5-7 years for sure. Greaves Cotton is an avoid. Probably Escort is a much better business. And remember one thing: both the companies are in a similar kind of a business. And whenever a larger company, whenever something of a recession comes in, then larger companies would always gain more market share. And that's why I would request you to get into Escorts more than Graves Cotton. If you have Graves Cotton, then sell it on the rise if you're not making losses. VIP industry is interesting, and probably you can average if you have it, but if you don't have it, don't buy at the moment. It would only do well when traveling begins, especially by air. So avoid VIP for the time being, but if you have a good 6-7 year view, these are the times to get into it on a SIP basis over the next 6 months. 3M India is always good for long term. Wait for declines into the stock to buy into 3M and probably buy it for the next 5-8 years. Yes, sure. Okay, so Bajaj Finance, interesting, and I would like to give a detailed view on Bajaj Finance as the query has come in. Uh, See, my opinion has always remained that whenever a stock which has been a marquee stock of the stock market for 5, 6, 7 years, it falls 50% or more, then their time is over. And I believe the same with Bajaj Finance. Not that it would not go up. I'm sure it would go up over a period of time. So you would see Bajaj Finance trade at 3,000, 3,500 levels 1 year, 1.5 year down the line. But that doesn't mean it will sustain those levels, and it will again track back to 3,000 to 1,800. So those days of Bajaj Finance where it used to make new highs are over, in my opinion. And another thing is days of financial companies and NBFCs are now of the past. And I believe that some of the sectors which are going to do well over the next few years, next 4 or 5 years, would be diagnostics, select pharma, as I mentioned, some of the stock 3, 4 companies in pharma, some of the major consumer companies which are into internet consumer, or you can say next gen consumer companies which are related to online transaction and so on and so forth, and consumer discretionary companies later on when all these things subside and people are able to shop, and they'll buy ACs, they'll buy coolers, they'll buy beds, etc. So they'll paint their houses and so on and so forth. So these are good companies to get into. Okay. Avoid Orient Cement or the cement industry with the construction at a all-time low. I think the cement companies would suffer. I don't know why there is so much of gung ho and so much of news about the cement industry. I would suggest that you avoid it. Okay. The- Can you make Orient Cement again? I said and avoid. Cadila Healthcare is a buy. I think Cadila is good, and if you are holding at higher levels, just hold on to it for good profitability. Carborundum is an avoid at the moment. Yes, IndusInd Bank is a complete avoid, and I've said that in my question and answer session as well. Okay, interesting. Andil has asked how to know when stock is going to go up. There are fundamental ways of knowing it, and there is technical way of knowing it. Fundamental way is whether the company is going to get good earnings this time around. So let's take the example of Kilpist. Uh, I looked at its PE. I looked at what the company used to do, what it is subsidiary. So 3B Black Bio, the subsidiary was a diagnostic company making kits for other viruses and other products, and probably they were doing well in that field from a very long time back. So it looked like on a fundamental basis the company was at a discount, listed at a discount, and currently at a discount, and that's why I bought into it. I did not buy into it that I knew that it would come out with some license from ICMR and all, but I bought into it because there will be a PE re-rating from 10. So one thing is to look at it fundamentally with respect to PE, with respect to its current price and type of earning that they are doing, and what could be the future earnings. Similar with Dixon Technology at around 2800, 2300, even at levels closer to 1800 was very gung ho about it. And that's because I expected them to have an EPS of closer to 100 rupees for the year, and that's what they delivered. The second way to look at a stock, whether it's going up or not, is technically. So, technically speaking, if a company is below 200 DMA and is having very good, you can say, buying, and the stock is up 20-30% and goes above 200 DMA, that's the first sign to buy into the stock technically with a stop loss at 200 DMA. And if a company have always been in an uptrend and has gone down 30% and then recovers very quickly when the market is still down, then that is another sign of the strength of the stock, and probably you'll buy into it that it will make new highs. So these are the ways to some of the ways to look at some of the stocks whether they're going up or not. So the Guardian has asked about Bata. So Bata is a very good stock. It has come down again. These are good levels to get into it, and on any declines, get into something like a Bata. Okay, about the Nifty. So, what will the Nifty do tomorrow? I believe Nifty is going to open up higher and it's going to go closer to 9200, 9250, and people will think that now the time has come that bottom has been made and there's no question of the stock market going back to 7500. And only then the consensus, when the consensus becomes that the market is going to go up, the market will turn and bite you and it will come down. So my opinion is it will go to closer to 9300 max, and from those levels there will be a sharp turn and we'll see the markets lower in about 10 12 trading sessions. That is my opinion. It is extremely overbought at the moment, and I would see a reversal in the market, but purely on the basis of what it will do tomorrow. I think tomorrow it will be a day in which the market will go up. All right. So thanks a lot for being part of this live session. I would do a similar live session on Saturday, hopefully. I'll come back for that. And thanks a million. Please like and subscribe my channel and hit the bell icon and also support me through Patreon. Thank you.